Economic Times news report came out with a real good article talking about the UAE coming out with a corporate tax rate of 15%. This is one thing I do like about when you compare St. Kitts with UAE. St. Kitts already has a corporate tax rate, so they're not on anybody's really watch list or blacklist because they used to have a tax rate for corporations of 35%. They dropped it to 33%. And limited companies have the same thing. You don't get by with on that. But the key thing is they give you an option if you want to set up a corporation or set up what's called an unincorporated business. Unincorporated business is, of course, there's no income tax in St. Kitts. There is a business tax of 2% after a standard deduction, which is almost nothing. But in St. Kitts also, you can live and have a business there, like a Seychelles company, live in St. Kitts and pay literally no income taxes at all. I've done other videos on this also, but I wanted to read this out to you. And also, folks, if you want to legally get your income taxes to zero or how to get a second passport as quick as 45 days, do three things. Hit the subscribe button at the right of your screen right here, and you get new videos automatically as they come out. And don't forget to hit that notification bell next to that subscribe button. And I would like to hear from you. If you got a question or comment, just put it below. And also, go to our website, www.citizenshipquickly.com. Hit the top bar that says apply with us, fill out the questions. Hit that bottom bar that says send it to us. We'll get back with you. We deal with over 100 citizenship by investment, residency by investment countries all over the world. All right, now this article came out and stated that global tax deal to hurt Indians who move trusts to the UAE. Now, several rich Indians who had moved family trust and holding entities to Dubai and Abu Dhabi amid the COVID-19 pandemic are now reaching out to their advisors fearing additional taxes following the new global tax of the Organization for Economic Cooperation and Development, also called the OECD, and UAE's plans to introduce more taxes. Now, after all major countries, including the UAE, signed an OECD global tax deal, the fear is that the country will introduce corporate tax of at least 15% across the board that will even apply to incoming of holding trust in entities. Now, new businessmen have created intermediary companies based in these countries so that the operations could be handled from there and they could avail of tax benefits due to the UAE's liberal tax regime. Now, some of them have even started creating fact patterns so that they don't get stuck with the tax and other regulatory issues. These fact patterns highlight historical transactions and structures are aimed at demonstrating that the move was not undertaken to save taxes, but due to other genuine reasons. Now, many Indian families had moved their holding companies and trusts to Dubai in the last 2 years, either completely or partially. Now that the OECD global tax deal has come about, the fear is that there could be a 15% tax in the UAE, even on these entities that would eventually wipe out a large part of the tax arbitrage, said Gurmesh Vanvari, founder of tax advisory firm Transaction Square. Now, the OECD last week brought together 136 countries to accept a deal to ensure that large multinationals pay a minimum tax of 15% on their global income from 2023, and those with profit above a threshold pay taxes in the markets where they conduct business. Now, while the OECD deal as of now is only applicable to around 100 multinationals that have a particular size, this is set to create tax complications for other companies and entities that are present in countries such as the UAE, says tax experts. Now, this is mainly because countries which have low or no corporate tax may be increasing or introducing corporate tax at 15% across the board at some point. And this is in the next 1 to 2 years, and that this will also impact the trust and holding entities in these countries, said AJ Roddy, partner at tax advisory firm Darar Advisors. Now, countries such as the Emirates were preferred for setting up certain holding entities or trusts, as it did not have any income tax or direct taxes up until now. Also, folks, if you want to legally get your income taxes to zero, how to get a second passport as quick as 45 days, do three things. Hit the subscribe button at the right of your screen right here, and you get new videos automatically as they come out. And don't forget to hit that notification bell next to the subscribe button. And also go to our website, www.citizenshipquickly.com, and just ask for some help. Are now people who have advised their clients on such matters, since several businessmen, especially in the commodity businesses, had moved to or moved part of their operations or wealth to the Arab nation after restructuring their holding entities. Now, a few companies also created structures under which some of the key decision makers moved to these holding or intermediary companies outside India. Going ahead, these companies would end up holding global operations, including the Indian businesses. Apart from, I tell you folks, this is not real good news for Dubai. I mean, it's this is something that I had a feeling they might eventually do, and I think it's going to trickle down. They do have a VAT now, and they've talked about the income tax, but they never really, came out with it and tried to, push it that much because they had so many people that were opposed to it. But it looks like, that this might come about with a likely introduction of corporate tax in countries like the UAE and Bahrain. Large business houses are already looking at their business structures and have started assessing the impact. The tax landscape in the region is now an interesting and evolving crossroad, said Nimish Goel, partner at the UAE-based tax advisory firm WTS Dwarra Consultants. The OECD deal that's coming about here, it aims at targeting large companies such as Google, Facebook, Apple, Amazon for creating complex structures in tax havens, including Ireland, the British Virgin Islands, Bermuda, Cayman Islands, and Mauritius. Now, governments want these large players to cough up at least 15% tax on their global profits, irrespective of the complex structures. And we're waiting to see if it's going to trickle down to everybody else. This is the key right here. I would be waiting, unless you're wanting to get a zero tax regime like St. Kitts. What I would be doing, I would be considering looking at this a little bit harder before you move to the UAE, because that's a major move in doing that. Anyway, folks, if you want to learn more on this, go to our website, www.citizenshipquickly.com, and don't forget to hit the subscribe button at the right of your screen right here. You'll get new videos as they come out automatically. Folks, we've got over 500 free videos out here. Look at these videos. You get educated on ways to get your taxes to zero and how to get a second passport as quick as 45 days. And I'll look forward to talking to you on the next video. Take care.